What's going on, everybody? It's Stas here. So in this video, we're going to be breaking down Foot Locker stock, diving a bit deeper into this company, taking a look at their recent earnings report, taking a look here at the 2019 annual report as well. And I want to talk to you guys about some risks involved with this company, because let me tell you, there's no companies out there that come with no risk, and Foot Locker does come with some risks here. And I want to go over whether or not I'm buying the stock, whether or not I'm staying away from it, and kind of my thoughts in general here moving forward looking at Foot Locker stock. So if you guys find value in this video, as always, hit that like button for me, consider subscribing to the channel, and check out all the free links down below in the description box if you want to take a look at our Strive Smart Discord chat. Over 2,000 people in there. That's free. Also, our Facebook group down below in the description box. And you can have 2 free stocks. You can claim them from Webull, valued up to $1,400. All you have to do is deposit $100 using my link, and you get your 2 free stocks. So let's get into Foot Locker. And before we even jump into what they just reported in terms of their recent Q2 earnings and deeper into this 2019 annual report, let's talk about exactly what Foot Locker is. So Foot Locker Inc. leads the celebration of sneaker and youth culture around the globe through a portfolio of brands including Foot Locker, Lady Foot Locker, Kids Foot Locker, Champ Sports, East Bay, Foot Action, Runners Point, and Sidestep. With 3,129 retail stores in 27 countries across North America, Europe, Asia, Australia, and New Zealand, as well as websites and mobile apps, the company's purpose is to inspire and empower youth culture around the world by fueling a shared passion for self-expression and creating unrivaled experiences at the heart of the global sneaker community. So off the bat, they own Champs, they own East Bay, Foot Action, and all those other brands just mentioned, and they're pretty much global. They're in 27 countries. Well, not global. They're not in every country across the world, but they have their hand in Europe, North America, Asia, Australia, pretty much all of the main continents. So before we dive deeper into the financial information here stemming back from 2015, let's talk about exactly what they just reported. So as of the second quarter here in 2020, they had same-store comparable sales of an increase of 18.6% year over year. That is unbelievable. Second quarter net income came in at $45 million or 43 cents per share. And if you guys were following analysts, many analysts were thinking Foot Locker was going to lose money this quarter. So they came out with a good profit, and they increased the same-store comparable sales, which is incredible. And non-GAAP net income came in at $75 million or about 71 cents per share. And get this, guys, the board actually declared a dividend of 15 cents per share. And if you guys take a look here at Seeking Alpha, I pulled it up. Seeking Alpha shows a lot of dividend information. You guys can get this on any website as well. Seeking Alpha does not sponsor my videos, but this is where I personally go. You can see they actually have a dividend growth of 0 years because they cut the dividend back in April, I believe. They were paying around a 40% or 40 cent rather dividend, 38 to 40 cent dividend. Then they cut it down to 15 cents now. So that's one thing worth noting. They did cut the dividend, but ultimately they're still paying roughly a 15-cent dividend. And right now the dividend yield here on Seeking Alpha is saying it's at around 3.14%. Payout ratio is around 53%, so they're paying around half of their earnings in dividends, so that's not too bad. And the 5-year growth rate is around 11%. So I'm not too sure if that's accurate due to the dividend dropping. So we'll see if Seeking Alpha updates this in a little bit. But either way, they're still paying a dividend of around 15 cents here. And if you guys take a look here and compare 2020 second quarter sales to 2019 second quarter sales, they crushed year over year. I mean, take a look. Sales came in at $2 billion roughly here in the second quarter of 2020, and they were around $1.7 billion in the same quarter last year. So when it comes down to top line, it seems like Foot Locker is growing year over year here based on the second quarter. That is pretty incredible. And second quarter year to date here, including the first quarter, obviously, is around 3,253, but that's in millions. So it's around $3.2 billion versus 2019 year to date in the second quarter was around $3.8 billion. So comparing those numbers, yeah, sales are down a bit this year when it comes to second quarter year to date as opposed to last year's second quarter year to date, but that's okay because we're in a crisis, we're in a recession. It makes sense. And the truth is, this drop in sales is not as bad, nearly as bad compared to other companies. So that is pretty good there when it comes to sales. And another thing I like looking at is cash equivalents, assets, and liabilities, right? So at this point, Foot Locker has $1.37 billion in cash and cash equivalents, and comparing that to last year in the same time period, they had $900 million last year. So at this time period, they have $400 million more, which is incredible given the situation we're in. Again, a recession, crisis time period. Them having more cash is good. I like that as an investor, as somebody looking to add potentially money into this company. And looking down here at long-term debt, $121 million. Long-term lease obligations. Remember, guys, this is a mostly retail location type of business. They have $2.5 billion in long-term lease obligations, and total liabilities are around $4.5 billion. So not too bad there. And taking a look here at the store activity location, this is important because you notice how Foot Locker and all the other brands they operate, all the way from Sidestep, Foot Action, Champ Sports. Well, Champ Sports is actually opening more than they're closing, but most of these locations, they're closing more locations than they're opening. So they're pretty much getting rid of locations quarter over quarter here. That's kind of what I'm seeing, right? And that's not too bad. That's kind of what they're trying to do in line with what they're doing. They're looking at picking locations that maximize profit. So if they're seeing a location that is not doing too great, they're going to shut it down and relocate elsewhere. That's the idea for most retail locations at the end of the day, guys. So you're noticing some closings, some openings, and that is what we're seeing. And as of August 1st, 2020, 3,100 stores here are active. And I'll leave all of this linked down below for you guys if you do want to dive deeper into it for yourselves. Now let's go into the 2019 annual report here to take a look at how this company's been doing over the past 5 years. And right off the bat, you guys can see here, back in 2015 up to 2018, so that 4-year time span, they didn't grow much. I mean, they had sales of about $7.4 billion in 2015, $7.7 in 2016, $7.6 in 2017, $7.9 in 2018. So 4 years of pretty much no top line growth. And in 2019, they finally cracked above $8 billion in revenue. So now I'm asking myself, okay, the sales not growing too much, top line's not growing too much, but is net income growing? And the answer to that is no, it's actually shrinking. In 2015, net income was around $600 million, and you guys can see the numbers for yourselves. I mean, $600 million followed by $650 million, followed by $510 million, followed by $547 million. So overall, this business is pretty stagnant at this point in time. So you have to ask yourself, what growth is involved here to boost up what's gonna drive more business in the future and boost up these revenues. And in my opinion, the online market is where Foot Locker is going to need to dominate moving forward. And I'll link this down below, the 2019 annual report, for yourself to dive deeper into it. But it pretty much goes into their growth strategy, their risks, the rewards of the, well, not really the rewards, but the risks involved with the business. And at this point, they're really just looking to invest for the long-term growth. And take a look down here. They remodeled and relocated 148 stores, elevating the customer experience with more premium brand presentations and improved storytelling. They're continuing to expand, and this is big for Foot Locker, guys, their geographic reach with the opening of 9 new stores in Asia, as well as their third-party distribution center in Singapore, enabling them to distribute products to stores and digital channels more efficiently. And that's the thing here. They're not saying that they're oversaturated here in the United States, but they have a huge base in the U.S., and to spurt more growth, they're going to need to enter foreign markets. Well, they're already in foreign markets, like we mentioned earlier. They're in a lot of different continents here, but they have to get deeper into the foreign markets with more stores located in the major cities there. So I think this is kind of what they're looking to do, obviously, and they launched Greenhouse, their new in-house incubator, which enables them to connect with exciting new brands and designers and to develop new ideas and partnerships that are relevant to youth culture both today and in the future. And that's huge, guys, because if they lose touch with what's going on with the youth culture, and they lose touch of what's popular, the different trends and so forth, that is going to be a huge disconnect in the business, which could end up, producing lagging results at the end of the day. And they made a minority investment in NTWRK, a unique digital platform that brings the best brands and cultural icons together on live videos, provide our customers with the option to shop exclusive products while they watch, and so forth. So you guys can see they are trying to position themselves and make these changes to succeed over the long term here. And with that, there are a decent amount of risks. One thing here is Foot Locker competes primarily with athletic footwear specialty stores, sporting goods stores, department stores, traditional shoe stores, mass merchandisers, and online retailers. And the thing here is, if any of these different business models, if they're able to get the shoes cheaper, quicker, and consumers can buy them for a cheaper price, who knows? Consumers could drop Foot Locker, say, screw that, I'm going to go buy them directly from a website here, maybe a smaller shop in my city, whatever, and support them. Who knows? That's a big risk here when it comes down to Foot Locker. And another big risk here, as you guys can see outlined, and all of this stuff, guys, all of these risks, they're outlined in the annual report. So go to Foot Locker Investor Relations and find this. Another big risk, which I think is one of the biggest risks, if not the biggest ones, is mall traffic and the time period we're living in right now, where we're seeing a shift. We're seeing a shift from people shopping in store more to shopping online. That is a big risk here, and the whole CV, the whole crisis we're in, this virus, that's scaring people from going out to stores even more. So this could obviously affect all of their in-house retail stores. But then you can argue, well, Stas, people are still going to go in-store and buy shoes no matter what, either from Champs, either from Foot Locker. And quite honestly, guys, I like Foot Action. I've shopped there before, and you could argue that they'd go to Foot Action too. So there's an argument. There's a case for both sides that people might just prefer buying online, so the mall traffic might die down. But quite honestly, I'm more in the camp of, I think that people will still want to go in the store and buy shoes and touch them and try them on. That's just me, guys. Honestly, I would never buy shoes online. I mean, I've done it before, but I much prefer going to the mall, going to Foot Locker, putting the shoe on, and leaving. So that is a risk. I mean, paying for it, of course, guys. You can't just walk in and put the shoes on and just leave. But after you pay for them, I prefer to walk out with the shoes in store. But either way, that's a risk, especially with this transition that we're seeing with e-commerce and so forth. But if I were to invest in Foot Locker, I'm willing to take that risk. And another risk here is the future growth is dependent on the international markets. Again, we mentioned earlier that they're heavily in the U.S. and they are in other continents, but they need to get deeper into those continents, and the growth depends on that. So if they don't execute, if the management, and another big thing here is management, if they don't execute, then there might not be growth, and they might actually start selling off. The stock might start selling off, and that will really just reflect the business model not doing well, that end up losing money and so forth. So those are a couple of risks here with this business. And again, I'm linking this down below so you guys can dive deeper into this and read it for yourselves. But overall, guys, I think Foot Locker, and not to make this video too long, but I think Foot Locker could be a decent turnaround play here. If we're pulling it up on ThinkOrSwim to give you guys more of a visual standpoint, you guys can see Foot Locker is under $30 per share. The stock was once about $70 back towards the beginning of 2019, so it's cut about 50%. It's down a massive, massive amount. And one could look at this as a turnaround play. If you're bullish on, retail locations and especially the sneaker community, if you believe they're going to continue going out, buying stores from, shoes from Champs, Foot Action, Foot Locker, online from East Bay, all these other investments, if you think they're going to pan out, this could definitely be a play for you. And honestly, guys, I do own a very tiny position here in Foot Locker, and I'm looking at it as a buy because a lot of these other stocks in the market, they're overvalued. Tech stocks are overvalued. We see a lot of other stocks are overvalued. And I'm just looking more at these companies that have gotten hit by the crisis, restaurants, retails. And I'm thinking these are the stocks that have more opportunity at this point in time. Again, at this point in time, things can change as always, but I'm just trying to dig into some value plays here. And I like Foot Locker. I like some restaurant stocks. I like a couple hotel stocks as well that I think can turn around. And yeah, Foot Locker, it's doing decent. Earnings came out as a surprise. The dividend, it's coming back, and slowly it'll get back to that 30 to 40 cent level that it was pre-crisis. So this could be a stock that you make, let's say, 20, 30% on, 50% on over the next couple of years, 3-5 years, and maybe you accumulate dividends on top of that. So that could be something worth looking at. And taking a look here, Foot Locker's PE is around a 15.9, so that is pretty cheap compared to a lot of these other companies out there, such as the tech names that they have PEs in the hundreds, some in the thousands even. And you can't really compare Foot Locker to tech stocks because tech stocks have much more growth. That is why their PE is a lot higher. But even comparing Foot Locker to the S&P, the S&P 500 right now, the PE on that is around, I don't even know, I haven't checked it in a couple of weeks, but it's got to be mid-20s at least, maybe 26. So 26 PE on the S&P 500, and Foot Locker has around a 15.9. So that's pretty decent, worth looking deeper into. And again, I have a very small position here in Foot Locker, and I do plan on maybe adding more money into it. And I think overall, as our economy gets back to normal, as the virus kind of gets put behind us, let's say we get a vaccine and so forth, I think Foot Locker is one of those businesses that is going to benefit a lot, and that could end up being one of those value turnaround plays. So overall, that's it for the video. Let me know down below in the comments, what are your thoughts? I would love to know. Hit that like button if you did enjoy it, and don't forget to join our free Discord chat and Facebook group, link down below in the description box. And don't forget to claim your 2 free stocks as well from Webull, valued up to $1,400. Those are linked right down below in the description box. All you have to do is deposit $100 into the account, and you get 2 free stocks, and I also get 2 free stocks since it is an affiliate link. So I'll catch you all in the next video. Thanks for watching. As always, peace out.